Today in crypto. In traditional markets, the S&P 500 remained steady throughout the week, finishing on 3,722. In Europe, the STOXX 600 rose marginally, finishing the week on 395. And here in the UK, it was a different story, with ongoing Brexit negotiations and the uncertainty surrounding no deal sending jitters through the FTSE All-Share. It finished the week on 3,685. In crypto markets, there was a little more movement. Bitcoin flew to an all-time high of $23,586. Some altcoins also experienced positive movement, with Ethereum hitting a 7-day high of $673 and Litecoin remaining solidly above the $100 level. Simon Peters, analyst, eToro. Bitcoin blasts through barriers aplenty. I've mentioned previously that I could see us breaking $20,000 before the end of the year. That has now come to pass, and in quite extraordinary fashion. Bitcoin flying through $20,000, $22,000 and then $23,000 in just 24 hours. We are now hovering around the $24,000 level following a further price move over the weekend, despite a large number of sell orders on exchange order books at the $20,000 level. Bitcoin still flew through what was previously a significant resistance barrier. I wouldn't have been surprised if the price had hung around $20,000 for longer, but the bullish trend was clearly snowballing. Bitcoin didn't even stop to say hello to $20,000 as it headed straight to $23,000. We saw a record trading day on eToro last Thursday in terms of the number of people holding Bitcoin, which is now up 30% from the start of the year. Also on Thursday, for the first time in 5 days, there were more positions open than closed, indicating that the market sentiment is now becoming more bullish than at the start of the week. Now we've set a new all-time high. We're in price discovery mode. Who knows how far the price can still go before the close of the year. With that said, and given the price increase we saw last week, a period of consolidation could be beneficial to Bitcoin price, allowing things to stabilize and cool down before another potential price movement higher. David Durhey, analyst, eToro. Waking up to tokenization last week, digital asset firm Signum that it will be offering its own shares in a tokenized format, accounted for on a distributed ledger. We have mentioned the distribution of shares in this format previously, and I believe that tokenization is one of the next steps towards a truly digital world. An instantly redeemable and highly liquid token clearly has benefits over a traditional paper stock. It would work just as well for a small business with a lower market cap as it would for a larger one with an enormous market cap, which in traditional markets would not see a comparable level of liquidity. We are still in the early stages of this technology, and so the difficulty now is the connectivity between brokers and wallets. Plus, there still remains the issue that regulation has not yet caught up to the concept of tokenization, although it is on various regulators' radars. Andrew Bailey at the Bank of England discussed in September the topic of tokenization and stablecoins. Simon Peters, analyst, eToro. Stimulus helps stimulate Bitcoin growth. The U.S. and Republicans finally approved its $900 billion stimulus bill on Friday, with each citizen set to receive $600 as well as support for small businesses. With the European Central Bank also a fresh round of measures to support its members through the COVID-19 pandemic, stimulus has been the buzzword for central bankers this year. Whether they like it or not, continued injections of capital into the global economy have also helped stimulate the Bitcoin price, which has been performing well on the back of this central bank support. Businesses and investors of all sizes are looking at Bitcoin due to its much celebrated inflationary hedge characteristics. And even though we might not see an actual inflation rise around the world, it seems to be remaining stagnant. Investors are not willing to take that risk. Santa leaves a Bitcoin all-time high under the Christmas tree. As this is the last newsletter of 2020, we'd like to take a moment to wish everyone a happy and safe holiday season. It's been a bumper year for Bitcoin and Ethereum in particular, and we expect even more in the next 12 months. See you in 2021. This is a marketing communication and should not be taken as investment advice, personal recommendation, or an offer of, or solicitation to buy or sell. any financial instruments. This material has been prepared without having regard to any particular investment objectives or financial situation, and has not been prepared in accordance with the legal and regulatory requirements to promote independent research. Any references to past performance of a financial instrument, index or a packaged investment product are not, and should not be taken as a reliable indicator of future results. All contents within this report are for informational purposes only and does not constitute financial advice. eToro makes no representation and assumes no liability as to the accuracy or completeness of the content of this publication, which has been prepared utilizing publicly available information. Crypto assets are volatile instruments which can fluctuate widely in a very short time frame and therefore are not appropriate for all investors other than via CFDs. Trading crypto assets is unregulated and therefore is not supervised by any EU regulatory framework. Your capital is at risk. Stellar, XLM, started a strong increase above the $0.1350 resistance against the US dollar. XLM price is trading nicely above $0.1500 and it could continue to rise towards $0.1800 or $0.2000 after forming a strong support base above $0.1200. Stellar, XLM, saw a strong increase above $0.1300 against the US dollar, while and saw a downside correction. There was a clear break above the $0.1350 and $0.1380 resistance levels. There was also a break above a crucial bearish trend line with resistance near $0.1367 on the 4 hours chart of the XLM/USD pair. The price rallied above the $0.1500 level and settled above the 100 simple moving average, 4 hours. The price traded as high as $0.1678 and it is currently correcting lower. There was a break below the 23.6% fib retracement level of the recent increase from the $0.1286 low to $0.1678 high. The price is now approaching the $0.1500 support zone. It is close to the 50% fib retracement level of the recent increase from the $0.1286 low to $0.1678 high. On the upside, the $0.1550 and $0.1580 levels are important hurdles. A close above the recent high might increase the chances of a steady increase towards the $0.1650 and $0.1720 levels. The next major stop could be $0.1800 or even $0.2000. If XLM price struggles to continue higher, it could test the $0.1480 support. The 100 simple moving average, 4 hours, is also sitting near the $0.1480 level to act as a strong support. A clear break below the $0.1480 support zone could spark a fresh decline. The next major support on the downside is near the $0.1300 level. Technical indicators: 4 hours MACD. The MACD for XLM/USD is gaining pace in the bullish zone. 4 hours RSI, Relative Strength Index. The RSI for XLM/USD is currently well above the 50 level. Major support levels: $0.1500, $0.1480 and $0.1300. Major resistance levels: $0.1550, $0.1580 and $0.1800. XRP was trading at $0.22941 by 124.624 GMT on the investing.com index on Tuesday, down 11.61% on the day. It was the largest one-day percentage loss since December 28, 2020. The move downwards pushed XRP's market cap down to $10.38341 or 1.25% of the total cryptocurrency market cap. At its highest, XRP's market cap was $30.58403. XRP had traded in a range of $0.22525 to $0.23930 in the previous 24 hours. Over the past 7 days, XRP has seen a stagnation in value, as it only moved 1 36%. The volume of XRP traded in the 24 hours to time of writing was $5,80517 or 27% of the total volume of all cryptocurrencies. It has traded in a range of $0,1922 to $0,2599 in the past 7 days. At its current price, XRP is still down 93.03% from its all-time high of $3.29 set on January 4, 2018. Elsewhere in cryptocurrency trading, Bitcoin was last at $30,329.50 on the investing.com index, down 9.33% on the day. Ethereum was trading at $992.56 on the investing.com index, a loss of 11.30%. Bitcoin's market cap was last at $561.84698 or 67.55% of the total cryptocurrency market cap, while Ethereum's market cap totaled $113.09432 or 13.60% of the total cryptocurrency market value. The Ethereum price has surged by more than 50% from $770 to $1,140 in the first week of 2021. A recent announcement by the Office of the Comptroller of the Currency, OCC, has provided a mainstream catalyst that could see the ETH price rally to new all-time highs. United States federal banking regulator, the OCC issued a letter on Monday, approving U.S. banks to use public blockchain networks and stablecoins in payments. Cryptocurrency prices jumped immediately after the OCC issued the letter, and Ether, ETH, in particular jumped nearly 12% on the letter's release, almost fully retracing the previous evening's losses. The OCC's letter clarified that national banks and federal savings associations could participate as nodes on public blockchain as well as store or validate payments made in those public blockchains' native digital assets or stablecoins. Given that the Ethereum blockchain is the most dominant payment settlement protocol, Mythos Capital founder and crypto investor Ryan Sean Adams tweeted, "ETH below $1,000 is a story for the grandkids why Ethereum price could boom." According to the block research on December 23, stablecoin transactional volume soared past $1 trillion in 2020. While Tether's USDT is the most dominant stablecoin with a market share of 73%, followed by USDC and DAI with a market share of 15 and 7%. Ethereum has a commanding lead as a dominant chain where most stablecoin volumes were registered. The OCC's letter will likely motivate U.S. banks to create a stablecoin payment strategy and inquiring about which public blockchain to adopt, with 83.5% of the $1 trillion in stablecoin transactions in 2020 taking place on Ethereum. The Pioneer smart contract blockchain will be difficult for federally regulated banks to overlook, as crypto investor Adams summarized on Twitter. Fact: the OCC just opened the floodgates for stablecoins. Fact: every bank is about to have a stablecoin strategy. Fact: Ethereum is the largest stablecoin settlement network by far. Fact: every stablecoin transaction increases the scarcity and value of ETH. Fact: ETH wins further to its value as an institutional hedge is the successful implementation of EIP 1559 into the ETH 2.0 upgrade on Beacon Chain. The Ethereum Improvement Proposal, EIP 1559 does two main things. It establishes the market rate for block inclusion and effectively burns the majority of the ETH used in the transaction fee. This change to Ethereum's gas management has significant implications to the monetary system and policy of Ethereum EIP 1559. The upgrade is also what Adams alludes to when he added, fact: every stablecoin transaction increases the scarcity and value of ETH. Burning the bulk of the ETH in transaction fees provide a deflationary mechanism to Ether's supply, which adds to the scarcity of Ether and long-term security of Ethereum, which could potentially make it as effective a hedge against fiat currency inflation as Bitcoin is purported to be. The Ethereum price is hovering around the $1,000 level, down around 4% in the last 24 hours, but is still up 43% for the week. Following Bitcoin's flash sell-off last night, Paulo Ardoino, CTO at Bitfinex, told Blockchain.news that he believes some of those trading profits were reinvested into Ethereum. The renewed interest in Ethereum isn't a huge surprise given the strength of confidence in Bitcoin among institutional investors. Part of the profit-taking on Bitcoin during this retracement may have been reinvested in Ethereum. Ethereum is the second highest cryptocurrency by market cap. The total value of Ether is currently $114 billion according to CoinMarketCap. While the ETH price surge is getting a boost from Bitcoin's astronomical bull run, another major factor appears to be attributed to the announcement that CME Group is launching ETH futures on February 8 as institutional demand for Ethereum's cryptocurrency rises. Blockchain bites $10 billion in Bitcoin futures, price wobbles, and liquidations. A correction in Bitcoin's price, from all-time highs, led to $1 billion in liquidated options positions. Ukraine announced a Stellar-based CBDC experiment, and a much-awaited Ethereum Layer 2 set a tentative launch date. Hit the like button and subscribe to the channel.